No one is talking about this major Prop 19 transfer problem. If you're not careful, you can dilute your Prop 19 property tax savings. We call this the buy down problem, and we're going to run through the math to show you. A big thanks to Jen, aka Princess Money. We were talking about this problem on the phone with her today. Hey there, Christian Walsh, real estate agent with Wire Associates. We have been helping the smartest buyers and sellers make the best data-driven decisions in this crazy market. For those who aren't familiar with Prop 19, you're probably not watching this video right now, but here's a quick overview. For those people living in California in their primary residence, if they are over the age of 55, they are able to transfer their property tax basis from their current home when purchasing another home. They have up to 3 times to do this, and it covers all counties in the state of California. And we've done a bunch of other content running through the pros and cons and how it can be done. In this video, we're going to talk about the buy down problem. We're going in deeper, showing you the math so that you can avoid this major mistake. Oh, and remember, we can't give tax or legal advice, but for the most honest and up-to-date real estate advice, subscribe to this channel. So you know how much I love being in front of a whiteboard? Well, here we are. We are going to run through the Prop 19 problem, specifically the Prop 19 buy down problem. Now, we didn't have this issue under Prop 6090 because you could only transfer one time. But now that you can transfer multiple times, there is a risk if you're not careful in your planning. So let's run through and I will show you that risk. So our important numbers, as I've discussed in the other videos, we have our base year value, which is the value of the property according to the tax assessor. You can get that from your property tax bill. You have the sale price. So that's when you go to sell the property that you're going to do the Prop 19 exchange or the Prop 19 transfer with, what that property ultimately sells for. And then the purchase price, that's the next one you buy. Remember, you can buy then sell or sell then buy, and we've talked about that. And you have 2 years between them to do that. So let's start with a base year value of $500,000. You bought the home however many years ago, and now the tax assessor says it's worth $500,000. So now you put the home on the market, and what do you get? Well, you sell it for $1 million. Congratulations, that's a California median home price. Orange County, it's even higher. Now the purchase price, so you're gonna go ahead and buy a property, you're gonna all excited to do your Prop 19 transfer. Let's go ahead and pick a property where that's $1 million. So what happens here when you do the Prop 19 transfer? Your base year value stays at $500,000. So you will not see an increase in your property taxes. This is great. We've done other videos on this. This is a handy tool. You can sell your property, buy another one, and you don't have to worry about paying additional property taxes. Now, real quick, don't forget that if you bought a property that was $1.2 million, you can still take advantage of Prop 19. Prop 6090, no, you couldn't. It was over. You killed it. But now under Prop 19, you can. So what do you do in this case? We have a $200,000 difference, $200,000 increase in the property you purchase. That's more than what you sold your other one for. So you're basically going to take that extra $200,000, and you can see where I got that, subtract the sale price from the purchase price to get $200,000, and you're going to add it up here to the base year value. So your new base year value will be $700,000 on a $1.2 million house. Successful Prop 19 property tax transfer. But here's where it gets complicated. All right, now let's use these numbers, and you're saying to yourself, you know what? I need to downsize. This house is too big. I don't need 2 or 3 floors. I want a single level home that's much tinier. So what I'm gonna do for my Prop 19 transfer is I'm gonna buy something that is $750,000. Now, it still makes sense to transfer your base year value. If you didn't transfer it, your base year value would be $750,000. So you're still saving money. Prop 19 successful, yay. But here's where the problem comes, and nobody's talking about this. I haven't heard anybody else bring up this morning. And that is, if you want to take advantage of Prop 19 again, you have an interesting problem. And that is now what happens is you got your $500,000 base year value. Now, granted, it's gone up slightly. Some time has passed. And now you go to sell, and we're going to keep the number the same. Don't worry, I'm going to talk about this in a minute, that real estate values go up. So now when you sell that property and you go to buy another one, let's say, you know what, the kids are moving in, I need some more space, I downsized, it worked, but now we got to get the whole family together, I want a bigger house. So now I'm going to go ahead and spend $1 million on that house, and that's going to fit all of us. Do you see the problem? The problem is that your base year value has now increased. So let's see, there's a $250,000 difference increase from our sales price to the purchase price. We add that up here, so now we're stuck with a $750,000 base year value. That means that we're going to owe more property taxes. So you can see the problem in buying down and then going right back to where you were in $1 million house on the second transaction. That's the problem. You have to plan carefully. And hopefully this makes sense. And Jen, I hope I did a better job of explaining it in this video so that you now understand where I was going with this. If you buy down and then you attempt to buy back up, you will owe more property taxes. Now, of course, you're going to say, well, Christian, come on, 10 years went by, values went up. So this home, if it went up 10%, that's going to be worth more. But don't forget that all property values theoretically are going up at about the same clip, depending on where you buy. So your purchase price actually is going to have to go up to get a comparable home. So really, if this has gone up 10%, your property that you bought here, this has also gone up 10% as well. So it's both of those numbers are going to go up together. So the point is still the same. There's going to be an increase in your property taxes if you buy down and then attempt to buy up. Don't even think about trying to do a Prop 19 purchase or sale without talking to us first. We are going to make sure you don't make the mistake in this video and a whole bunch of other mistakes as well. Have some questions about Prop 19 or this buy down problem? Leave them in the comments below. Make sure you're subscribed to our free weekly email newsletter, and updates like these will be gently delivered to your email inbox every Sunday. And if you like the numbers in this video, you're going to love the numbers in this next one. Thanks for tuning in. This has been Christian Walsh, real estate agent with Wire Associates, and we can't wait to hear from you.